Hi, this is Kirubakaran Rajendran. Welcome to another video series with Groww. In today's video, we are going to talk about what are the certain secrets involved in trading scalping successfully in the long run. So if you're an option scalper, or if you're a future scalper, or if you're a cash market trader who know dealing with any kind of such short-term trades where scalping, getting in and getting out very quickly, then this video is definitely going to be helpful for you. As you know, scalping is nothing but you are getting in and getting out of a trade very quickly. So we're anticipating a certain move and you're trying to get into the markets, and the moment the move happens, you're trying to book a very small profits and you're going to come out of it. So unlike long-term traders or short-term traders, this is extremely short-term where you are going to make quick profits in a series of trades. So people get in and get out maybe 5 times or 10 times in a day, and they make little profits over the long run. So with respect to option scalping, the first thing that every trader that they need to keep in mind is cost, charges. So the more you trade, the more charges you incur. So obviously with respect to scalping, we can't trade very less. We need to keep trading more. But in spite of trading more, how do we keep the cost under control? So the first and foremost thing is, if you're trading with futures, first stop trading futures. Instead move to options. So let me explain why trading with futures versus trading with options, why options is much better than futures. Consider you're a scalper and you're trading with futures. So for an example, you are trading with Nifty futures where the lot size is 50 and you are buying at 18,000 and you are selling at 18,005. So when Nifty moves 5 points, you are selling it considering 250 rupees as your profit. So now 250 is your gross profit. So 5 into 50, 250. But when you check the charges, so the brokerage charges is 20, 40 rupees, that is normal. But if you check other charges, securities transaction tax, STT, exchange turnover fees, AB fee, GST, stamp duty, if you include all this, your total charges is 220 rupees. So out of 250 rupees, 220 rupees is gone for the charges alone if you are trading with futures. So at the end, you are getting only net P&L of 30 rupees. So in spite of making 250 rupees profit, you only make 30 rupees of overall net profit after all charges if you're trading with futures. But if you trade the same with options, let us see what is the overall charges. I'm now buying options. So with respect to Nifty options, suppose I'm buying at the money options where I'm buying a 300 rupees option and selling at 305 rupees. Now the same 5 into 50, my gross profit is same 250 rupees. So my gross profit is same in futures as well as in options. But now if you check the charges, it is extremely lower. So the brokerage charges is same 40 rupees. But the securities transaction tax, STTs, AB fees, if you include every charges, after all charges, only 75 rupees goes for charges, and you end up making almost net P&L of 175 rupees. Whereas in futures, you were making only 30 rupees after all charges for the same 5 points profit. But with respect to options, with respect to same 5 points profit, you're making almost 175 rupees of profits. So that is why charges is really an important factor when you do scalping. So if you're a scalper with respect to futures, try to avoid that and try to get into options. And the next important point is, even though the market is open between 9:15 to 3:15, as a scalper, you don't need to trade the complete 6 or 6.5 hours. We need to focus on the prime hours, which is nothing but between 9:15 to 10 o'clock and in the morning, and in the evening 2:30 to 3:50. So this is the prime hours when more volumes comes into the markets, when more traders comes into the markets. So that is why most of the time the day high or day low is made during the first hour or the last hour. Most of the time you will observe that between these 2 hours, after 10 o'clock to till 2 o'clock, the market would be in a range bound move, or it would not make much violent move. But this first hour and the last hour makes a huge move on either side. So if you are able to if you are able to identify the direction of the markets in the first hour and the last hour, then you would be able to really make quick profits. So as a scalper, you don't need to sit in front of the markets all the time. Just wait for the right opportunity, and most of the time these right opportunities comes between 9:15 to 10 o'clock in the morning and between 2:30 to 3:15 in the evening. So focus on these prime hours and then trade. And for most of the scalpers, the problem is they tend to make very little profits over the long run, but in just one trade they lose all these profits because they tend to wait for the market to come in their direction. See, as an option scalper, always use time-based stop loss. So what is time-based stop loss? So time-based stop loss is nothing but when you're entering into a trade, you are having certain anticipation about the markets. Say suppose you're going long and then you're expecting the markets to move up. Now, if the market is not moving up but not moving down also, then what you would say is you will wait for the stop loss to get hit. But as an option scalper, the moment you enter into a trade, if it doesn't work in your favor, just get out. This is the best risk management strategy most of the professional option scalpers do, because you're anticipating a move, and if that move doesn't happen, you don't need to wait for that move to occur. So all the option scalping times, or whatever the scalpers the people know trade, their duration is extremely minimal. They tend to get in and get out within 5 minutes or 10 minutes of the trade. So don't wait for the markets to go in your favor. The moment you enter into a trade, keep a time-based stop loss. If it doesn't work in your favor in the next 5 minutes or 10 minutes, just get out. And the next thing is, see, option scalping deals with from morning to evening. So what you can do is, you tend to take little trades. Like first trade you take in the morning, sometimes you find, get a good opportunity, then you take in the afternoon, again you find a good opportunity, you take, tend to take one more trade. So when you keep taking all these multiple trades, you keep taking multiple risk. So when you are taking the first trade, consider the first trade as your your overall risk trade. So when you take this first trade, say suppose you are making 20,000 of overall profits in the morning itself, then what you can do is, for the rest of the days, you consider this 20,000, whatever the profits that you made in the morning, as your overall risk. So you deal with your profits instead of you deal with your capital. So as the moment you make 20,000 of overall profits in the morning, you risk that and trade that. So what happens is, even if the market goes against you, psychologically it helps you, because you are risking only your profits, you're not risking your overall capital. So take that first trade, and if that first trade is really profitable, and risk with that first trade whatever the profits you made with the next following set of trades. So this way, psychologically you have a very calm mind. You don't need to tend to panic. You don't need to have this urge to make huge profits, because in the first trade itself it has become profit, and you are risking this profit for the next couple of trades. So this gives you peace of mind. So whenever you are doing scalping strategies, or when you are following a scalping systems, try to risk with whatever the profits that you made for the next set of trades. That gives you peace of mind, and that gives you very good trading decisions. So you tend to make better trading decisions when you're risking your profits instead of you're risking your overall capital. And the next part is, you don't tend to increase or decrease your lot sizes based on your trading outcome. For an example, see, what happens is, as a scalper, we tend to make continuous winning streaks, or we tend to make continuous losing streaks. When the market is in your favor, you tend to make continuous good profits. But when you're in a continuous good profits, you tend to think that you are really confident, and this overconfidence leads you to take higher risk. So don't do that. So if you're in a profitable streak, it might get lost at any point of time. So don't tend to increase your lot size from 2 lots to 5 lots, or 10 lots to 15 lots. Because when you keep increasing, at one point if it goes against you, then you tend to lose all your profits. So just because you are on winning streak doesn't mean that you are really knowing everything about the markets. So it is just a simple trading random outcome. So you don't need to focus too much on increasing the lot size based on your profitability. Keep it as a fixed component. So like if you're trading with 2 lots, just continue to trade with only 2 lots, no matter whether you are making higher profits or minimal profits. And similarly, to control the risk, what happens is, sometimes you take a trade and it ended up in loss. And second trade, what you do is, you double up your trading capital, or double up your total trade lot size. If you traded with 10 lots and if it ended up in loss, the next trade you tend to trade with 20 lots, because you tend to think that you wanted to recover that loss. So in order to recover that loss, you go into revenge trading and you trade with higher lot size. So until you get into a winning streak, you keep doubling up your overall lot size, or you keep doubling up your quantity, because with one trade you tend to think you can recover all the losses. Don't do that. If you are on losing streaks, it is wise to reduce your lot size instead of increasing your lot size, because when you're in losing streak, which means that you're not in sync with the markets. So when you're not in sync with the markets, your trading decisions might end up giving you bad results. So better to reduce your lot size when you're on losing streaks. Do not increase your lot size when you're on losing streaks. And the best day to do scalping in options is specifically on expiry days, because on expiry days you tend to market moves in a violent move. You know why the market moves in violently in one-sided direction on expiry days? Because market wants to trap these option sellers. So you can make use of this opportunity. Just wait for these option sellers to get trapped. What happened is, most of the option sellers will be concentrated on one specific strike. So focus more on the OI, open interest. See where the maximum open interest is created, on which strike it is created, which means that most of the option sellers have shorted that specific strike, right? So you just wait, because these markets tend to give a false breakout on the upside or on the downside to trap all these option sellers. and that when the when these kind of sudden move happens, these option sellers get trapped and their stop loss gets hit. When the stop loss gets hit, it creates a cascading effect where multiple stop losses gets hit and the market suddenly moves up. So that is why you could see suddenly these options which were trading at 2 rupees, 3 rupees suddenly moves to 30 rupees, 40 rupees, because these option sellers get trapped. So on expiry days, focus on which strike is having higher open interest and keep waiting for that specific strike to move. So when market suddenly moves from 2 rupees to 6 rupees or 7 rupees, you get in, and then from 7 rupees when it goes to 18 rupees or 20 rupees, you just get out. And this way you are just waiting for the market to come to your place and you are trying to get in and get out quickly. And this is totally based on certain rule based approach of you're tracking the option sellers and see where they are getting trapped and there we are getting into it. So this gives you a higher profitable streaks and higher probability of profits. So when you are trading on expiry days, follow this rule. So as an option scalper, another thing that we need to keep in mind is we are not non-directional traders. We can't short both call option and put option and get in quickly and get out quickly, because these non-directional systems works well only on the larger time frame. It works on a DK basis. But as an option seller, we need to know the trend, because we need to short only call option or put option. We should short either this side or that side. So you need to know where the market is going to go up or going to go down. You identify the trend much earlier. So how do we identify the overall trend in the markets? So for that, you keep track of the overall open interest. So if the higher open interest is built on the call side, then it means that market is bearish. So tend to buy only put option as long as there is a high OI built up on the call side. Similarly, if there is a high OI buildup that happens on the put side, then it signifies that market is bullish. Then in that case, you keep trading only with call option. So by tracking the overall open interest data on the call side or on the put side, it gives you which strike to choose, whether the call side or put side, and accordingly you can trade. So these are some of the most important things that you need to keep in mind as a scalper, because no matter what, scalping is all about getting the timing right. So by following all these principles whichever I have told you, this is going to greatly help you to improve your overall profitability with respect to your option systems or scalping systems. So if you guys have any questions which I have discussed today, please post it in the comment section. I'll address it. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.